So we're going to show you how to roll out a bull call spread. So we'll focus your attention on the right hand side of your screen in your portfolio window, and we can see here we have an Apple 110 115 bull call spread that expires in May the 20th. Now let's pretend that you wanted more time for this trade to work out. You wanted to extend it to maybe June or July. You could roll out this trading position. So the easiest way to do it would be just for you to come in and close this trade down and then separately go and open up another bull call spread. And a way of doing it all in one is to create a combination order, which we'll show you how to do now. So if we focus now on the left hand side of your screen, you can see our options chain. So we're going to maximize that window. So you can see here at the moment we've brought in the May 20th and the June 17th expiry with our 115 110 calls there. If you wanted to bring in another expiry, just go down to where it says last trading day, click in on multiple, and we could bring out the July 15th calls there as well. So now we want to create a combination order in order for us to roll out this position. So to do that, we click on Strategy Builder, and you can see the Strategy Builder window opens up in the top right hand corner of your screen. So the first thing we need to do is close down our existing May 20th bull call spread. So for May the 20th, we currently own the 110 call. So in order to close that side of the trade down, we need to sell that leg. So we click on Sell Leg. And then we have sold the 115 call. So in order to close down that position, we need to buy that back. So we click on the ask price or the buy leg. And you can see here that's telling you this is the May 110 115 bear call spread. So the opposite of a bull call spread is a bear call spread. So if we have a current bull call spread, by placing a bear call spread for the same strikes and expiry, we're closing down that trade. So now we go to June the 17th. This is where we want to roll out this trade to. So now we got to go to the opposite trade and create a bull call spread again. So we're going to buy the 110 call option for June the 17th. So we click on buy leg. And then we're going to sell the 115 strike price for June the 17th. So we click on sell leg or the bid price. And that all gets populated up here into the strategy builder. So now we have 4 legs. So let's start with the first 2. So at the start of this video, we said to you, you could simply close down the first trade and then open up a new trade separately. Well, that's what the first 2 legs do. They're actually closing down the first part of our trade. The second 2 legs are actually opening up the new trade for June the 17th. So it's calculating all of our deltas here, and it's calculating our bid and ask for every single position and giving us an overall version. So what we're being told here is we're going to have to pay somewhere between 0 and 20 cents in order to roll this trade out for another month to give ourselves a little bit more time. So let's go and show you how you go and do that. So again, order entry is limit. We always choose limit. Quantity is 1. And we'll leave it at an 18 debit there because we're paying a little bit extra to buy more time here for this trade to work out. So that's okay. And we leave the trade as day order. So we're just going to click on submit the order. We get our order confirmation window, and you can see it's listing out the 4 trades. The first trade is we're selling the 110 call for May. That's because we own one at the moment. We want to close it down. The second trade is we're buying the 115 call for May expiry. And that's to close down the short call we have there at the moment. And then the final 2 parts are to open up a new bull call spread for the June 17th expiry. We're saying here we're only prepared to pay a maximum of 18 cents, and it's a D for debit. And here we'll see our trading commissions are somewhere between $2 and $6. So we'll click on transmit, and that order has gone into the system there now. So we'll just open up our order. You can see now on the bottom of your screen that order has been placed there. So let me see what it looks like in your trades. You can see here. So we can see here the total trading commissions was $3. You can see here exactly what we did. So you can see here we bought, sold, sold and bought, and this is basically rolling it out. All the prices that it cost us, but when we add all of that up, the net price here was 18 cents. When we go into our positions tab now, what you're going to see is a 0 beside our May the 20th calls, and then all of a sudden you're going to see 2 separate positions here for June the 17th. We have our long 110 call, and then we're short in the 115 call. So then we have a bulk call spread out to June. So that's how you can roll it out all as one trade using the strategy builder on Trader Workstation.